What are the most active stocks right now and how can it help you make more money? Let's go ahead and break it down. We're looking at activity. When we say a stock is active, we're really looking at volume. That means how many shares are traded in a given day. And when you see a stock that has a lot of volume, that has a lot of activity, it means that there are a lot of buyers and sellers on both sides of that equation. But what does that really mean for you to make money? It means that stock is more likely to move. That means, for example, it can make or lose 5% in a single day, which can give you a lot of opportunities as an investor. For example, we covered an entire list of some of the best bank accounts. Some of those accounts were making 4% or 5%, but that would take you an entire year to make that money. Now, yes, that money is essentially guaranteed, it's FDIC insured, and has much less risk. But again, imagine you get all that 5% in a single day, and then tomorrow you can go back and do the exact same thing. Now, you'd have to be extremely consistent to make that work, but there are some trades to be had. But first, you gotta know what stocks are moving. Okay, so let's start at the list. We'll start at number 10. I promise you they get better as this list grows. All right, so the first one here is Visa. Now, for me, I'm not the biggest fan of Visa. It's only up 0.8%. That's it. 0.8% in the last 6 months, but it is up 22% over last year. Visa, as I'm sure you know, is one of the most valuable companies on the face of the earth, one of the more reliable companies on the face of the earth as well, and they're not going anywhere. But, I mean, when you compare it to everything else on this list, you can find some better returns, but that does not mean that Visa is not a good stock. It's not one that you may want to add to your watch list, and you might want to find some trades for. So this is one I would definitely add, but we have it here at number 10. Next here is perhaps the worst performing stock, and everything else is positive from here. That is United Healthcare. United Healthcare is up 8% in the last 6 months, but it's down 1.6% in the last year. United Healthcare is an interesting company for me because, again, if you look at any index fund, any broad S&P 500 or U.S. stock market index fund, it's going to be in that top 10. It is a major company. It is huge, and you would think that they shouldn't lose any money. It's a healthcare company, health insurance company to be exact. Why would it ever be negative? But here we are. Okay, so it's one we probably don't talk about enough, but they are quite solid. They're clearly not going bankrupt anytime soon, but you can find better returns. Visa, even though those aren't the most impressive, they're still up there, right? So that's the worst stock you're going to hear of today on the list. All right, next here is one we did cover very recently. That is Eli Lilly, up 50% in the last 6 months and up 69% over the last year. It's making a lot of sense. Okay, it's making a lot of sense now, right? We had talked about how good Eli Lilly has been for more than a year now, and one of the reasons as to why is because it is so active. There are so many people pouring into and out of the stock. There are a lot of opportunities to be had to make money in Eli Lilly, especially if you are a long-term investor. That's the easiest thing to do as a long-term investor, is to buy and hold a company that's doing this well. Next here is a company that's probably not shocking here, depending on how you want to look at it. Okay, so it's up 47% in the last 6 months and up 146% in the last year, and that's Meta. Did I perhaps give up on Meta too soon? Perhaps. I will also argue in my defense that Meta, to this day, has not reached the peak that it was about a year and a half ago. So it still hasn't broken even, but it is very close. But Meta has been on a tear this year for obvious reason. All of tech, for the most part, has done well, and that makes it one of the most valuable companies and one of the most active companies as well. The next one, a company I have just been holding on to, I haven't been so active in it, is Amazon. Now, Amazon used to be a lot more active than what it is right now. It's only up, put that in air quotes, only up 17% in the last 6 months and up just 5% over last year. It's Amazon, if I hadn't said that already. Amazon's another company that took a significant hit really over the last 2 years and still has not reached the point to where it was near the end of 2021. But it's Amazon. Okay, people are still going to love Amazon. People are still going to buy Amazon. And Amazon's still going to be actively traded. As you can see, I would surmise, depending on how the economy goes, that Amazon still has a lot of runway. I don't think it's too late to buy into Amazon if you're a long-term investor. And obviously, if you are a trader, this could be a good opportunity over the next, let's say, 3 to 4 weeks. The reason why I say that is because we are moving into retail season. There are some reports, both positive and negative, about what we expect for the retail season here moving forward. I would also say that don't forget that earnings is coming out here pretty soon. If I'm not mistaken, I think I saw a headline that Amazon's earnings is tomorrow. So I don't know if I would trade Amazon immediately, but it is something you can add to your list. Next here, Alphabet, I wrote here Goog, which is still the stock symbol GOOG. They are up 30% in the last 6 months, up 45% over last year. You're starting to see that tech is dominating this list, and would not be surprised if the rest of the list is tech. But you know how I feel about Alphabet. We've talked a lot about their AI initiatives, and the next company right above them is Microsoft, which has comparatively modest returns, if you will, up 17%, which is crazy to think, because remember, stock market on average is going to get you 7 to 10 in an entire year. Making 17% in half that time is still quite good. But it is up 36% over the last year, which is obviously good as well. Microsoft is one of, I did a whole video about forever companies, so I don't want to say it's a forever company for me, but I have had it forever. Okay, I will say that. It's done me quite well and has done most investors quite well. Next one here is surprising from a performance perspective, because I'm going to tell you this first. It is only up 5% in the last 6 months, and it is only up 18% in the last year. What company could that be? And it's in the tech space. That company is actually Apple. Apple, when I look at the numbers compared to some of the other returns, is disappointing. Now, that doesn't mean that you have to sell Apple. It doesn't mean that you even have to buy Apple. That's totally up to you. But Microsoft has 3 times the return in the last 6 months, double the returns in the last year. I could say nearly the same thing about Google as well. So just interesting. Now, I'm someone who just dollar cost averages and just holds Apple, so I personally just haven't looked into it. Just interesting. Okay, we'll see where that goes. I have my criticisms of Apple. I'm an Apple owner and user, and obviously a shareholder, but we can get into that for another day. Next here, so where it starts to get a little bit more fun, is Nvidia, up 59%. Up 59% in the last 6 months alone. In the last 6 months alone. If we're looking at the last year, ladies and gentlemen, Nvidia is up 243%. 243% in a single year, which is absolutely ridiculous for a company that was already in the top 10 most valuable companies anyway. Which is wild to think about, and you can still gain 200+% in a single year, which is ridiculous. Now, we know why this is the case, primarily due to AI and our reimagining of technology, and people just remembering that Nvidia is still a solid company, which is why I told y'all last year that I was still holding Nvidia. I wasn't selling nothing, right? This is the reason as to why, okay? Now, the next one here is Tesla. Tesla is the most traded company by a mile. The worst day for Tesla in terms of volume is still better than any other company on this list, okay? People are trading Tesla left and right for a bunch of different reasons. I think that this is also a part of just Elon being Elon and him just being a celebrity CEO. Most people, unless you watch this channel every day, can't name a single CEO left on this list other than probably Mark Zuckerberg of Meta. If I said Sundar Pichai to some of y'all wouldn't know who that is. Okay, he runs Google. But Tesla up 28% in the last 6 months, up 3% over last year. Long term meaning next 6 months to a year. I know, let's say medium to long term. I'm a little concerned about Tesla because Elon Musk did have some comments about how he felt about the company. Not anything crazy this time, but in terms of higher interest rates slowing down people from buying cars, right? I wonder how that's going to play out. They've also dropped the price of Tesla for quite a while, and Tesla has been a little shaky in the last few days. If I remember correctly, I want to say on Friday, the company was down about 5% in a single day. Now, I could argue that that's a buying opportunity and that the next day, the company's going to pop. That's an argument that can be had, right? But that's obviously not a guarantee. But Tesla is the most traded company this month. And I would argue, if I stretch it out, it's probably been the most traded company for the last 2 to 3 years, outside of the meme stocks, once you kind of take that out of the data set. But that is a company that you want to add to your list. If you're definitely looking to trade, I would argue that all these companies could be on your long-term watch list as well. But yeah, we've got a lot of companies here that are traded and have a lot of volume. But what are the ones that are off the radar? What are the stocks that you can buy, hold, and just allow that to continue to grow for you? And what are the stocks that pay the best dividends? Because as I look at it, I don't think a lot of these stocks do pay a good, healthy dividend, as most stocks don't. So what are the best ones that you should add to your portfolio and add to your watch list? These videos are the ones that you want to watch next.